A really common piece of advice that's given to new self-published authors is to start their own publishing company in an effort to appear legitimate. No, don't do that. Hey guys, it's Deborah and welcome back to my channel where we talk about the business side of self-publishing. When people hand out this piece of advice about starting a publishing company so you can appear more legitimate, they're mainly concerned with one particular thing. This bit on the Amazon product page listing or wherever else you are distributing your book. One of the major tells of a self-published book is that instead of having a proper imprint name, it'll say something like independently published or that sort of thing. Before we get any further into this video, we need to clear up some basic misconceptions. An imprint name is basically a pen name, but for a publisher instead of an author. It's mainly for marketing and branding purposes. This can be a little bit confusing from a self-published author perspective since you are both the author and the publisher, but it becomes a little bit clearer if you look at some of what the traditional publishers are doing. A company is a legal kind of construct that creates an entity that exists as its own separate person for the purposes of the law. A company is not necessarily a business, and a business may not necessarily be a company. A business is generally defined as a set of activities which are undertaken for some profit-making purpose. Businesses can be run using any number of structures. You do not actually have to have a company. You can actually have a business in your own name, and that's called being a sole trader. A business can be called whatever you want within certain limits as long as you register that business name with your local business authority. The stuff that shows up in this section has nothing to do with starting a publishing company and everything to do with the ISBN of your book. If you're curious and wondering why that makes a difference, then you should check out my video here on ISBN, which will save you hours of Googling around on the internet. And that publisher information can be whatever you want it to be. It can be your own name, it can be a company name, or it can be a specific imprint name that you have registered as a business name. The point is, you don't have to actually start a publishing company in order to get your publisher information to show something that doesn't scream self-published. By the way, if this video has been helpful to you so far, then please give it a like so that I know to make more content like this for you. The second thing that bugs me, like really bugs me in particular as an accountant, is when people say that, oh, you should start a self-publishing company in order to save money on taxes. To put in a standard disclaimer, this does not constitute professional advice, and if you are in a position where you are considering whether or not to structure your self-publishing business with a company, then you should definitely seek professional advice of your own. We are just talking in general terms here. Simply speaking, that is not how most tax systems work. Most tax jurisdictions around the world they have a lot of similarities. So while the specific rules and legislation and all of that is going to be very different from tax jurisdiction to tax jurisdiction, modern tax systems all work according to the same kind of general principles. You've got income and you have expenses. The government sits down and they pass laws about how they are going to tax these various types of income, and they will pass laws that declare certain types of income to be taxable and certain types of income to be exempt, and so on and so forth. Then you have deductions. Broadly speaking, there are two kinds of deductions. You have general deductions, which means an expense is generally deductible under certain general principles already established by case law or by other laws, or you have specific deductions, things which are tax deductible specifically because there is a piece of legislation that says you may deduct this expense against your assessable income. The thing that's going to determine whether or not you're going to have to pay tax on income is the type of income that it is. If you are deriving business income as opposed to income from a hobby or a one-off windfall, then yes, generally business income is going to be assessable income, which means you have to pay tax on it. And then generally speaking, you are also going to be able to deduct any expenses which were incurred in the course of deriving that assessable business income. Whether or not you're filing a tax return as an individual or as a company for your self-publishing business, it's kind of irrelevant, okay? The tax law does not change based on the legal form that you are using to run this particular business. What the tax law generally cares about is the fact that you are running a business, and therefore it will also let you take any deductions that you incurred in order to actually get that income from that business. That's the first thing. The second thing is some videos talk about how, like, if they have additional income as an individual, then like with marginal tax rates, then they move up into a higher tax bracket and so on and so forth. And yes, like that is factually true in terms of how marginal tax systems work. If you have marginal tax brackets, then as your income increases, you may, yes, move into a higher tax bracket where the additional income that you earn in that particular bracket is taxed at a higher rate. If I, for example, started a company in Australia, I would get taxed on that business income at the company tax rate, which may or may not be higher than my personal marginal tax rate. And therefore, in terms of immediate cash flow in any given tax year, yes, I may actually come out ahead if I have all of my income coming in through a company instead of on my account as an individual on my tax return, because I, as an individual on my tax return, may have other sources of income from other investments or salary or whatever else. However, the thing is, if you have money coming into that company, you need to find some way of getting it out of the company, right? Like, you can hire yourself as an employee of that company and pay yourself a salary. You could hire yourself as a contractor and send invoices through to the company, which would show up as expenses on the company side. You could just do it the straightforward way and pay yourself dividends from that company. Like, there are many, many, many different ways of getting money out of the company. That said, the tax legislation is designed with this in mind. And depending on your tax system, you may or may not have offsets or credits or whatever that take into account the tax you've already paid on that income when it came through the company and not require you to pay that again as an individual. It does get very complicated. So it is not something you want to do without having an expert in tax law advise you on this. My point here is the money that you're thinking of saving, you're not really saving it, okay? You're going to be paying tax on it at some point. It's just a matter of whether that's going to be in this particular taxation year or in a future taxation year. So yes, I mean, in theory, you're probably saving something on the time value of that money that you're not getting immediately taxed on, assuming that your tax rate as an individual is actually higher than the company tax rate in your jurisdiction. But equally, you may not be, because the tax law changes all the time. And so you don't actually know what the future of the tax law is. It's going to depend on a whole bunch of insane factors. Tax authorities are smart. They have very smart people working for them. There are things called anti-tax avoidance rules. And in Australia, at least, it's a particularly nasty little bit of legislation. The law literally says, if we think you're doing something dodgy because you don't want to pay tax, then we can just say you're being dodgy and we will require you to pay tax on whatever it is that you were trying to dodge the tax on. If tax minimization is your goal with this, like, don't hair off and go start a publishing company on your own. Like, consult a qualified tax accountant and get tax advice on your personal situation. And to be honest, from just like a business strategy level, like, yes, minimizing tax is a good thing to do, because obviously you don't want to have a suboptimal structure where you're paying much more tax than you have to. But you should never do anything in business solely for the purpose of minimizing tax. If you're new to self-publishing and you don't have very complicated personal financial affairs, don't go and start your own publishing company under the illusion that this is going to somehow save you money on taxes. The main benefit of starting a self-publishing company is you're creating a separate legal entity. The company is a totally separate person to you under the eyes of the law. That means a company can enter contracts in its own right without you as an individual having to be a party to the contract. It can incur debt and own assets in its own right. Generally, if something goes wrong with your self-publishing business, you can just liquidate the company instead of having to liquidate your personal assets. If you're operating your self-publishing business as a sole trader, you're not going to have that luxury, because all of the self-publishing business is entangled with your own personal assets and liabilities and so forth. You may want to protect your self-publishing business assets from your personal liabilities. I'm just going to throw a couple of crazy examples out there. Let's say you have a self-publishing business, it's doing quite well, and you also gambled a whole bunch of money on Bitcoins, and now you can't make your mortgage repayment. Because the business is its own separate legal entity, that means the bank can't actually come after the company for your company assets, That is the biggest reason to start a self-publishing company. There are all sorts of compliance and legal requirements involved when you set up a separate legal entity like a company. And the biggest one I'm going to name right off the bat is financial and taxation implications. Because a company exists as its own separate legal entity, you're going to have to do a tax return for it. And depending on your jurisdiction, it may also have separate financial reporting obligations of its own to whatever your local authority is. There are a whole bunch of requirements under normal companies law, for example. It is not an insignificant amount of admin stuff that you have to deal with. At some point in your self-publishing journey, you may feel that the benefits of limitation of liability and asset protection are going to outweigh the headaches of all the ongoing legal and compliance costs, but 90% of the time, most people who are starting out self-publishing are not going to need it in the early years. Unless you have some very specific personal circumstances, like this is probably not one of the most critical things you should be worrying about at this point of your self-publishing journey. If you are already very successful in your self-publishing journey, then congratulations. And I hope that you have some really good tax advisors or financial advisors who are already talking to you guys about some of this asset protection stuff. If you're fortunate enough to be in that position, then incorporating your own publishing company can actually open up some more options for you in the long term. The first is expansion. Up until this point, you have probably just been publishing your own works. But if you have established your own publishing company, what this is doing is allowing you to capitalize off the intellectual capital that you've built up over your years of self-publishing by helping other authors publish their books. Ultimately, it's going to be up to you how you want to structure that arrangement. You might want to start a proper indie publishing house and operate very similarly to what traditional publishing does, or you may want to go to the assisted self-publishing end of the spectrum and hire out services or whatever. The second thing is exit planning. If you ever decide that your self-publishing journey is at an end, you can actually choose to sell off your business to somebody else. When you're trying to sell a business, generally whoever wants to buy your business is going to do a bunch of due diligence, including inspecting your books and records, and it's just so much easier if everything associated with that business, all of that title and all those assets and everything just is already sitting in a company which already has its own set of books and records. That's not to say it's not possible if you don't have this in a company structure already, but if you have everything already in a company, it just makes the process of selling the business a lot easier. For similar reasons, it's a lot easier to do things like succession planning for your will and your personal estate and things like that, simply because you can just will the shares in your company to your successors, whoever they may be. So what really matters if you want to appear professional and legitimate to any prospective customers who are browsing your product page? Well, to be honest, I don't really think the imprint name that everybody is obsessing over with actually matters that much anymore. The quality of self-published books is generally quite high these days, so you kind of have to really be looking for it and doing your research to figure out if something is self-published or not. And most readers are not going to do that, right? Most readers will decide whether or not they're going to buy a book based on your cover and title, your blurb, and the look inside sample. So if you want a detailed breakdown of what not to do when self-publishing, then check out this video next.